What's going on, guys? Welcome back to Clay's Coins. I believe competence creates confidence, so I'm back to bring you some more information, education, and better understanding of cryptocurrency, the stock market, and what we're doing to make money when the market looks like this. So, as you guys know, I've been out of the market for a while. I made a video answering some questions, whether or not I quit YouTube, what was going on. I sold out, quite a lot of things. And if you were keeping up with the channel, little things on my social media, anything like that, go follow the Twitter and Instagram if you don't already. I told you guys, I was out of everything. I was selling before everything crashed and we hit a bottom. I was able to do that, sit on the sidelines for a little bit. It just felt a little disingenuous to try to make content for you guys about, different things to buy, to hold, to sell, even though this isn't financial advice, but different plays to look at when myself, I'm not looking at any plays. You know what I mean? It seems kind of weird to me to push stuff on you guys or to, lay out this game plan that I'm not even following. So at least if I'm going to bring you guys some stuff to look at, I'm going to be looking at it as well. So today, we're going to be talking about a couple things. I have a few things lined up for you guys. Real quick, guys, as we're getting into the video, go ahead and hit that like button, hit the subscribe button if this is your first time watching the channel, because I'm back, baby. It's been a little bit, but I'm here to make regular content for you guys again. I've been missing it. I've been itching. I've been feeling, this is the first time I felt nervous making a video in a long time, and that just shows that it's been way too long, guys. I'm back. So, hit that like button and subscribe button. Go ahead and comment down below what video was the first of mine that you ever saw that made you follow the channel. Today we're going to be talking about a couple things, but we're going to keep it brief. Number one, the most important thing, the Fed meeting on February 1st. That is absolutely paramount when it comes to the health of the market in the short term. Obviously, we're looking really good right now. Maybe. We're looking really, really positive for the time being. This was a huge bounce. When you have almost an entire calendar year of negative and losses and red, it feels really good to see different cryptocurrencies up 100% in the last 30 days. That's wild. That's something we haven't seen in so long, unless it was just like an individual pump. But if we're talking about an overall market correction, this is the closest thing we've seen to it since, I don't know, spring of 2022, when we had a little bit of a rise up and before we step down, because that was kind of the story of last year. Is we kept thinking we were at a bottom, we would have a dead cat bounce and then fall right back down again. And you guys know as well as I know that things like that really suck. They hurt. They throw all technical, you can be dialed right in with your technicals, and then the entire market decides to crash again. And then two countries decide to go to, WAR with each other. I don't want to say anything to get demonetized, because a YouTuber I watch, who you guys may know, Keenan Grace, he's a huge finance YouTuber, and he mentioned in a video the other day that he's getting videos demonetized. I don't know what he would ever do to get anything demonetized. I mean, that man does not even swear in his videos. The fact that he could do something to get demonetized is just mind-blowing and shows how crappy YouTube's algorithm can really be sometimes. So to make sure that the algorithm knows that we're doing a good job, hit that like button. Earnings all week long. So, combined with the concoction of the Fed meeting and how that can play out, because if the Fed comes out, I'm going to let you guys know right now, full transparency, the Fed comes out and says we're going up another 50 basis points, 75 basis points, expect a huge turnaround. Expect us to go right back down to where we were, because Bitcoin and the stock market, specifically Bitcoin and the S&P 500, have been eerily correlated. As this recession has really swung into full bloom, Bitcoin has become more correlated with the S&P 500 than it was during the bull rally, when it was almost inversely correlated, meaning it was running opposite. And if the S&P would go down, Bitcoin would go up. I.e., why you would hear a lot of people talk about crypto as a hedge against inflation. Well, inflation really hit, the recession really sunk in, and Bitcoin started following S&P 500, because when everybody, retail and institutions, are losing money, retail being us, the good guys, and institutions being the big hedge funds, Citadel, BlackRock, Vanguard, people like this, when everyone's losing money collectively, or everyone's looking at the same market, things tend to change. And things like Bitcoin, gold, oil, silver, things that people use as a hedge against inflation, are now starting to run correlated with the regular market, because everything's going down. It was a massive, fundamental macro slope that we hit hard. And the only way to really make money was big puts, you know. And a lot of people don't like puts because they don't want to bet against stocks that they formerly like, even though it's we try not to trade emotionally. It ends up happening. It's human nature, you know. So we're talking about the earnings. We're talking about the February 1st meeting, talking about me being back and what I've been doing, which was on the sidelines watching. And then I have a very important, transparent thing that I need to share with you guys, which is the inverted yield curve. If you guys do not know about the inverted yield curve, I'll show you briefly what it is. It's not something crazy. It's not this big in-depth conversation we need to have, but it is a very key indicator for the potential outlook of 2023, 2024. Pretty much a U.S. economic outlook or indicator for whether or not we are going to be really sunken into this recession for much longer. That's the inverted yield curve. So we'll get into that too. And then as a bonus, if you stick around to the end of the video, I'm going to have 5 cryptocurrencies for you guys to watch during this next little period of time. Obviously, a bunch of cryptos just went up 30, 40, 80%, 160% in some cases. And you guys know me. What I've always said, once a cryptocurrency is up that much, you've already missed it. Just wait a minute, wait for it to cool off, buy the bottom, and ride it up again. However, we're at such a bottom and such a stair step down that we really have many floors to go before we hit the top floor. And that top floor hasn't changed. It's still right up there. We can still look at all-time highs that we were at before as the top floor, but we're so close to the basement now that we can go up 40, 50 floors and still not necessarily be at the top. So, let's get right into the February 1st Fed meeting. There's not much really to say about it other than be careful. At the time of this recording, as of right now, it is January 30th. Tomorrow will be January 31st, and February 1st is the Fed meeting. Technically, it's the 31st to the 1st, but we're going to hear about it on February 1st. This is going to be a huge indicator for a short-term massive drop in the market. If you guys play the stock market calls, options, puts, I would really be wary. This week is one of the most volatile weeks ever. You might think, oh, volatility, that's excellent risk versus reward. Maybe I'll get into some put options, and then the Fed is going to raise basis points, plus earnings are going to come out. There's no way they're going to be good, but guess what? The stock market has volatility factored in. They have freaking everything priced in. So the volatility expectations are going to be through the roof, meaning you can have big movements in price and they won't affect many option plays as much as they would regularly. That's a big thing to remember. Just because you think, oh, obviously this week's going to be huge for ups and downs because of the Fed meeting and earnings, I'll get ahead on that. Quants thought of that pre-pandemic. Like, they have everything. If you guys haven't seen the meme, Wall Street has priced everything in, including you falling and breaking your phone tomorrow in the midst of an option play so you can't sell. They have that priced in. This is what these guys do, and they have billions to play with to make sure to get it right. So, the Fed meeting. Now, let's look at the earnings because I was able to find a pretty cool graphic for you guys that has all of the earnings for this week, and there's a lot. And I know, it's Clay's coins, not Clay's stocks or Clay's trades. Speaking of which, have you guys seen Trey's Trades channel? He deleted all of his content. I haven't watched Trey's Trades in a while, ever since he had I actually stuck up for him and got into it with someone on Twitter. Got into it meaning just, pretty much laid out my case and stuck up for it with him because he gave a realistic expectation if there was a short squeeze, how high he thought AMC would go. He said he believed it would go to like the tens of thousands of dollars per share, and people were losing it on him because he didn't say it would go to $1 million a share. I mean, some people you just can't make happy, and that's a very important thing to learn in life. way outside of trading, just a real life lesson is you can't make everyone happy. And for as many people that love you, there's going to be just as many people that hate you. When Michael Jordan was no question solidifying himself as the greatest basketball player to ever play, there were so many people who could not stand him. Same with Kobe. Think about LeBron. Think about Cristiano Ronaldo and Lionel Messi. Arguably the two greatest of all time, but they're so polarizing because as many people that love you, there'll be people that hate you. You can't do everything right to everyone, so don't try, just stay true to yourself. He made this post and had a big YouTube video explaining all his reasoning and was very, down to earth about it. He said there was a lot of pressure from different YouTubers to not be as honest and upfront as you might want to when you're talking about a moon potential. And I mean, realistically, if we're talking about a short squeeze play, we don't know how high it could go. It could go to $1 million a share. Will it? Most likely not. But him saying that AMC could go to, at the time, I think it was like $18, maybe $22 a share, all the way up to tens of thousands of dollars a share, and that isn't good enough for some people, mind-blowing. Anyways, that's a side tangent. I stuck up for him on Twitter because people were going at him for not feeding them absolute nonsense, and I said that he made an accurate assessment and that, he clearly knows what he's doing when it comes to technicals. If you guys have actually watched his videos looking at charts and different things, the man has some education and some information to share in a good, lighthearted, easy to digest way, which is rare. So it was shocking to me to check his channel and see that every single one of his videos, besides his interview with Adam Aaron and his exit strategy of AMC, were deleted. Those are the only two videos on his page. If you go to his page, go to videos, those are the only two. That's weird, and that's like a message. The only videos are an interview with Adam Aaron, the CEO of AMC, and then the other video is an exit strategy on your stocks and like how to take profits, how to get out during the short squeeze. I don't know, man. It's just crazy to me that he has like 400,000 subscribers and just dipped out like that. That's life-changing money you're making off of YouTube right there. So the fact that he just abandon that, let me know in the comment section if you guys have any information about that, just because as a fellow YouTuber, I'd kind of like to know. Now, looking at earnings. Monday, which is today, before open this morning, we had these right here. Otis is probably, maybe First Foundation. There's not too many notable names. After close today, we're looking at Cabot. We're looking at, Fabrinet. We're looking at Alexandria. Tomorrow is a huge day before open because we have Exxon Mobil. Then we have Sirius XM and UPS. That is a great indicator. UPS is going to be a good indicator for the quote-unquote Santa rally. How much we really saw, what the deliveries were looking like, how much the consumers were really, really buying this holiday season. After close is arguably even bigger because we have massive powerhouses. AMD, PayPal, Alphabet, which is Google if you guys didn't know, GM, Starbucks, EA, MicroStrategy. These are huge, huge stocks to watch in these earnings. And like I said, please be careful when you're trading options based on these. In my opinion, I follow the rule of thumb, which is don't trade options on earnings. I do not. Period. I will not. In my opinion, you might win some. You're going to lose crazy on some of these earnings calls. Just saying, I know people who have had excellent batting averages playing earnings. Has that ever changed my mindset? No, because I understand how much of a gamble it is, and it's too much for me. Before open on Wednesday, we have Waste Management. That's a good one to watch. Dynatrace, Boston Scientific is a decent one to watch just for fundamental sentiment of the market. But after close on Wednesday, we have some huge ones. And remember, generally, if you're having an earnings call after close on one day, you'll hear about it the next morning. So on Wednesday, when we're looking at Meta having after close earnings calls, we'll hear about that most likely Thursday morning. That's when it will be released to the public. So after close on Wednesday, we have Meta, we have Qualcomm, we have Spotify, T-Mobile, huge Suncor Energy. we have huge products and projects, corporations, companies releasing their earnings calls then. Thursday, looking at open and close, we have Nokia, Amazon, Ford, Snap, Merck, Honeywell, Unity, Activision Blizzard. We have Skyworks, Shell, Skechers, GoPro, a lot of commercial, a lot of fundamental plays. And then Friday, we don't really have anything eye-opening. You probably can't see this bottom right hand area just because of my face being in the way, but there's not too much to look at for Friday. Mostly Friday will be dealing with the last day of the week for trading and looking at the after close earnings. Now right here is something that I wanted to show you guys. This is an inverted yield curve. This is a photo of it. Essentially what happens in an inverted yield curve, almost every single time we've had a positive flip to an inverted yield curve versus a yield curve, we have hit a major recession. Almost every single time in American history, besides, I believe, one false positive that happened in the 60s, when we have seen this happen, we have fallen deeper into a recession or fallen into a major recession. This has now happened. The yield curve, as you can see, signifies on one side how much you're getting back from your investments when it comes to 2-year and 10-year bonds. Maturity, how long you have to hold based on your yield. When it's inverted, as you can see, it appears that the shorter your bond is, the higher your yield, which is not how it's supposed to be. There's no reason that a 2-year bond should yield you more money back than a 10-year bond should yield you. However, as you can see with the inverse correlation of this curve, of this yield, that's what ends up happening. That's why it signifies a time of recession, because this isn't really how the economy is supposed to work, guys. This isn't how bonds are supposed to work. These are measures that come into play when we're really not doing that well economically and macroeconomically, most importantly. So, as you can see, a 10-year bond would yield you not as much, right about here. A 2-year bond would yield you quite a bit more, right up here. That's just, it's not what you want to see. That's a nice little visual diagram for you guys, just to see. Now we'll look at, and I'll explain to you exactly what it is. This is from Investopedia. It's a great little site you guys can check out. Inverted yield curve, what it can tell investors, and examples. So it's the unusual drop of yields on longer-term debt below yields on short-term debt of the same credit quality. What's that? What does that mean in layman's terms? An inverted yield curve shows that long-term interest rates are less than short-term interest rates. With an inverted yield curve, the yield decreases the farther away the maturity date is. Sometimes referred to as a negative yield curve, the inverted curve has proven in the past to be a reliable indicator of a recession. So, there is one time it talks about later on in this article where historical examples of yield curves, that's what I'll show you guys. The 10-year to 2-year Treasury spread has been a generally reliable recession indicator since providing a false positive in the mid-1960s, right there. So, that hasn't stopped a long list of senior U.S. economic officials from discounting its predictive powers over the years. That is something to remember. Obviously, there are some senior U.S. economic officials, pretty cool title to have, sounds to me like they do a lot of manipulating, allegedly, but they say that it's not that strong of an indicator, and if you guys have ever used Fibonacci indicators or anything relating to charts, you'll understand that some people swear by them, and some people say it's astrology for men. It's one of those polarizing topics. So, the inverted yield curve, however, besides that false positive in the 60s, and very, very brief inversions of it, it's really played out just about one way, guys, which is, it means a recession. We're already in a recession. A lot of you will say that. I would agree. If you say we're not into a recession, I would like you to define to me a recession and then define how we're not in one currently. Moving on to the overall state of the cryptocurrency market, we now have over 22,370 cryptocurrencies in the world. We have a total market cap of $1 trillion, which is under half of just Apple. That's crazy. Real quick, Apple is the biggest company in the entire world with like a $2.1 trillion market cap. That's over double every cryptocurrency in the world combined. The dominance held by Bitcoin is starting to slip. ETH 2.0 is starting to become a big thing and living up to some of its expectations. Not a lot because of the market we're in right now, but some. 42.5% of the entire market cap of cryptocurrency is held by Bitcoin. As you can see right down here, the market cap of crypto, or the market cap of Bitcoin rather, is 445 billion. The market of all crypto is 1 trillion. So about 42.5% is Bitcoin, 18.4% is Ethereum, almost 20%, almost a fifth of all of crypto is Ethereum, which is a lot. But between the two, we're looking at 60% of the market being Bitcoin or Ethereum. That's crazy, guys. So if you are still not sold on the two big dogs of Bitcoin and Ethereum, I don't know what you guys are holding back on. BNB's right there, but as you can see, these are the two largest cryptocurrencies in the world, and they're up 30%, 40% in the last 30 days. Could you imagine stock market gains like that? If you were playing Lucid, you definitely realize those. So, looking at 5 cryptocurrencies that I think you guys should check out over the next couple weeks. These are very low risk, big market cap, nice, well-renowned projects. I picked these because it's different than what I usually bring you guys, which is the lower cap, almost micro cap, lesser known plays that you can get huge gains on, but have fundamental utility and actual real world backing. So, the first cryptocurrency we're looking at, guys, is the proof of stake blockchain platform that looks to become the next big thing. Cardano. I know, cue the Alex Becker jokes, cue the using your girlfriend's boyfriend's Wi-Fi connection to buy ADA on BlockFi. Cue all that. I mean, we can make jokes. Obviously, if anyone was holding Cardano when it was over $2, I'm so sorry. It's right around the 30-cent mark, for closing in on 40 cents. These are daily candles. Look at this run-up we have experienced over the last little bit of time. This is quite a bit. I mean, if this was any other crypto, I would say these are serious gains. So the fact that it's Cardano, I mean, you can't hide it any longer. This is a nice little tunnel to fall into. It's a nice channel to trade in. Obviously, we're quite a long way from where we were. However, Cardano is one of the most reliable, lowest risk plays that you can get into. It currently has a market cap way up there in the top 10, but you can get gains on it like it's a top 50 or a top 100 crypto based on how it's going to pump, what it's going to do versus Bitcoin and Ethereum, how they're going to do. Whenever you see Bitcoin go up 30, you're going to see a lot of other cryptos go up 50 and some go up 100. When you look at Cardano, it's an ecosystem that you can look at as well. So you can watch Cardano, see it go up 20%, and then look at something like Cody that's built on Cardano. Watch that run up 100%. Those are the type of things that once you get more comfortable with trading, more comfortable identifying what cryptos are in what ecosystems and how the pumps go in time correlation with one another, you can really start to play those very easily and readily. So Cardano is our first one to look at. Next up, we're going to have one of the best charts when it comes to daily candles that I've seen in a long time. Polygon, Matic. I mean, guys, this has not really fallen that much. When we talk about we're right where we were May of last year, this is a huge spot that we need to, I mean, right here you can see the level we need to break. You don't need to do any sort of indicators whatsoever. The level we need to break is right about here. We had a couple little flashes in the pan, but right around this $1.30 mark, if we break this, we could absolutely run up to right around the $1.70, maybe even $2 territory. Currently sitting at a price of $1.11, I think a lot of people would be okay with those gains. When you have the first well-structured, easy-to-use Ethereum scaling platform with Polygon, it has now flipped Solana in the top cryptocurrencies in the world. Meaning, when I say flipped, that means that Polygon's market cap is now worth more than Solana. That's crazy. Over a time of huge bearish sentiment and massive downfalls when so many cryptocurrencies fell off, especially a scaling solution for Ethereum, almost all scaling solutions took a big step back when Ethereum bumped up to Ethereum 2.0 because it became not less scalable, but it doesn't need as much scaling because it's faster, it's cleaner, it's better. You don't need as many different applications helping it out as you did before it was proof of stake. Now it is proof of stake. A lot of things change in a beneficial way, which might not be as beneficial to something like Loopring or what you would think Polygon. However, Polygon has held so strong, it really never dipped below the 69-cent mark. Nice. Since, we're talking about June and July of last year, which was just a miserable time to be invested in cryptocurrency. However, we saw the bottom there. We saw the bottom for Polygon. We saw the bottom for a lot of cryptocurrencies, and a lot more fell back to that bottom. Polygon did not. It was able to show sustained health and growth. Even if it wasn't growth to others, when you look at this, it doesn't necessarily look like a lot of growth, but the fact that it didn't plummet is almost more admirable and crazier to look at than something that grows a tremendous amount and then flashes right back down. Polygon, in my opinion, might be the next massive top 5 cryptocurrency in the world. Seriously, guys. And after I say something like that, what a good time to say not financial advice, not a financial advisor. It's not an indication to buy, hold, or sell any cryptocurrency talked about in this video or on this channel. As you guys know, now we're looking at Solana. Wow, does this chart look different from Polygon? Solana is in the gutter. Solana is looking like it is at the best buying point that it's been at in a very long time. Do I still believe in Solana as a payment platform? Yes. Do I believe that it's still a highly functional, open source, decentralized finance solution project? Yes. Nothing has changed about it. I've talked to you guys about Visa, American Express, MasterCard, saying that Solana is the blockchain platform for payments of the future. If companies and corporations who are in direct competition with a platform like Solana are saying that, I don't know why we would think anything different. We hit bottom right here. It was like, in January. We just hit it. Just last week, we had a flash bottom right there of, the $9 mark. So it's no wonder that we have this huge run up that we just saw. When something falls that low, you gotta think, maybe some big money players are pushing it down, because look at the profit that has been made over the last little bit of time. It is just wild. Over the last, month or so, we're up to almost 300%. That's just gross when you talk about percentile profit. So let me know if you loaded up on that Solana bag at the end of December and sold recently. And if you haven't, obviously not financial advice, but there is nothing wrong with taking profits. If you can make these profits, you can buy back and make more, because you just, oh my gosh, did very well in a time period like this. Let me know in the comment section down below if you were able to make some money off Solana while that was screaming up over this past month. Number 4 on our list is Litecoin. Litecoin is arguably has some of the most utility that I've ever seen of any cryptocurrency. I've actually used Litecoin for what it's meant to be used for many, many times, which is a fast, cheap, reliable, secure payment network. Anytime I send crypto anywhere, generally, it's with Litecoin. It's the cheapest for transaction fees. It's very, very quick. I don't have to sit there and wait and worry, and it just works. That's one of the things with the Litecoin that's great, is it just works. A lot of cryptocurrencies, they're great ideas, but in practice, it kind of falls short, which is life. A lot of things, a lot of great ideas, and a lot of great things that people try to do just fall short in practice. They're great in theory, but it's just not there once you actually see the result. Litecoin, I cannot say the same about. Litecoin, delivers on all of its promises and then some. When Bitcoin can take as long as it does, and a sharded coin like Litecoin, which if you didn't know is a shard from Bitcoin, can take over, different parts where Bitcoin might fall short and might leave some to be desired, Litecoin can fill in. Litecoin can back that up. You can send stuff anywhere. It's very quick, very easy. There's nothing crazy to say about Litecoin. I'm sure you guys know about it. You can friggin' trade Litecoin on Robinhood. So it's not like not advising that anyone use Robinhood, by the way. I'm just saying the fact that it's even on there means that it's an up there crypto when you talk about notoriety and pretty low on the risk to reward ratio. So low risk. I think there's big gains to be made with any of these cryptocurrencies. Even though they're low risk, you're going to be looking at good profit just because they're much more reliable and every crypto is about to profit. Last but certainly not least, we have Avalanche. And man, looking at this mountain that we've made, it looks like an avalanche is falling down. And all this red, it matches the logo with the Manchester United shirt. By the way, Rashford has been in insane form. Man U is really, really looking great, and I love it. I'm a Manchester United fan for the Premier League and Barcelona in the Liga. Let me know if you guys follow any soccer or any football. I love hearing what you guys are interested in the comments section down below. But I love looking at these old charts, too, that we've made up in previous videos. That's one of the reasons I like TradingView. We're going to bump this down right here because this was to signify our low. And we hit the low a little bit ago at $10.40, and we're actually sitting at an exact double of that at $20.80 as of right now for Avalanche. That's at the time of this recording. It might not be that when you guys watch it, but Avalanche is an absolute beast of a platform. I've talked about it many times on this channel before. I'm a huge fan of Avalanche. It's a layer 1, 6,500 transaction per second Ethereum alternative. It's excellent for gaming. It's excellent for NFTs. It's excellent for so many ideas that people are looking into to really get blockchain gaming and blockchain media out there to more people. Avalanche can handle so much more than Ethereum can, and it looks to be an Ethereum killer. Will it? Who knows? We don't know about anything like that. I'm definitely not in a market like this going to make any predictions on what will be an Ethereum killer. I used to think Luna was going to be a Bitcoin killer. Look at that. So I'm not going to make any assumptions on Avalanche, but there's no assumptions needed when you talk about its power, its speed, its reliability, its real-world utility when it comes to actual ideas that people are implementing. Avalanche looks phenomenal. They're coming out with great blockchain games. I believe there's one game being built on Avalanche right now that's like a first-person shooter, and think of like Counter-Strike, like CSGO, where you get the knives and all these different rewards that generally require microtransactions, or you have a market that you can buy different skins and different attachments, different guns. Well, picture those all being NFTs. That's what this game is looking to accomplish. I can't remember what it is off the top of my head. My buddy was talking to me about it the other day, so I figured I'd mention it. I actually just thought of it as I was talking about Avalanche, but it's an excellent idea, and I think that's a huge thing for gaming. When you talk about NFTs being involved in blockchain gaming, the immediate thought in my mind is they would just replace DLC and microtransactions. Instead of buying a DLC bundle for $15 that you get a couple new skins for, or a couple of exclusive weapon that resets at the end of every season, or with the coming of a new game, you can buy a digital piece of something that you actually physically own and can take with you and sell for real world value. The fact that you could have something that actually has monetary value outside of the game just making money off of you is an excellent idea. And it makes way more sense for players. Instead of dumping hundreds of dollars into microtransactions, they're dumping hundreds of dollars into things that they can actually own and sell and make some money back so they can buy something new. It just makes more sense, guys. So the fact that it's being implemented in the way that it is, it's nothing to be confused about. It should have been happening a while ago, but now we actually have the technology to do so, and platforms like Avalanche make that all possible. So I'm a huge advocate on Avalanche. These are all top 20 cryptocurrencies in the world. You don't have to worry about any of these being a microcap, something that is going to pop if it takes off but go to zero if it doesn't. Obviously, all of these friggin' CEOs could go under like Sam Bankman-Fried or Do Kwon. No one saw those coming. So the fact that those can happen means anything can happen. Who knows? But outside of something catastrophic happening like that, we're looking really, really good. With these 5 cryptocurrencies, the overall state of the market, as long as the Fed doesn't crush us with a bunch of basis points and the inverted yield curve isn't as detrimental as it appears to be, we could really, really be looking at a turnaround in the market, guys. That's why I came back with a video today. I'm going to be coming back with more content regularly. I'm not going to promise you guys how many a week I'll be doing, but I am back. I am here. We're making videos. That's it. Straight up. Alright guys, that's going to be everything for the video today. I cannot believe how long this video is. I literally told myself I was going to make this a quicker video and start making my videos quicker. And then I get in, I start recording, and it just goes. Right now, before edit, I'm at like over 40 minutes, which is insane. Usually my videos pre-edit are like 28 to 32 minutes. I get them down to like, 20, 24, right around there, depending on the length of the video. It's been a long time, if ever, that I've seen it over 40 minutes like this. So I'm going to wrap up the outro. Hit the like button, hit the subscribe button, follow me on Twitter, on Instagram. Go ahead and subscribe if you haven't already. Like I said, hit the notification bell so you don't miss an update now that I'm making videos again. Comment down below because all comments help the algorithm. And if you see someone being a goofy in the comment section, just let them know. We're here to make money. We're not here for a bunch of nonsense. We're not here to talk about, oh, this crypto's down. We're here to give you guys some information, education, and better understanding of the cryptocurrency and the stock market, because I truly believe the more competence you have, it will create that confidence that you need in all aspects of life. So thank you guys. Take care of yourselves. Stay hydrated. Good looking out coming back to the channel. If it's been a minute and you're here, let me know in the comment section down below, because I appreciate you guys. Oh, by the way, put a flexing emoji in the comment section down below, as you guys know.